The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome back. Today we're going to revisit one of my favorite exploration stories again, Tectonic Metals, which is listed on the Toronto Venture Exchange under the symbol TECT, and here in the US on the OTCQB it's under TETOF. And likewise here you have their website, so you know how to contact them, which I urge you to do. And among the reasons I urge you to do that are kind of macro reasons for the gold space and the markets generally. Those of you who follow me regularly know that for a few weeks now I've been suggesting that we take some money off the table when this correction in the precious metals was starting to get underway. We're going to redeploy that more aggressively in some companies that didn't have big moves already, especially ones down to food chain, so more along the exploration stocks. And we want to stick with the more elite stories when it comes to exploration as well. And Tectonic is one of the ones, honestly, at the very top of my list of all of the universe of companies out there. This one checks an awful lot of boxes. Now, before I get into it, real quick, the preliminaries as usual, either Tony Reda, the CEO, who will join me in a second, or myself, maybe making forward-looking statements. We'll most decidedly be doing it when we share our bullishness on still the long-term picture for the gold price itself, but also talking about Tectonic. You know, some months back, it's only a little bit dated, frankly, but the core of the story for Tectonic and its flat gold project up in Alaska is very instructive. There's a lot more detail than we're going to go into today, which is going to be more of an update of what's happened recently and what we see coming into focus more as we get into 2026. The conversation I had with Tony initially is one that I've linked in the show notes here that you should go back and watch. It talks about the very active involvement of Doyon, the corporation, the Alaskan Native Corporation, which is the second largest shareholder of Tectonic. And folks, they wrote a check for that. This isn't something that they were given to have the right for Tectonic to be exploring on Alaskan Native ground. They have a viable corporation. They're involved in a lot of different businesses, and they're active shareholders of Tectonic. That tells you a lot by itself, not to mention the fact that you've got Crescat, which has been a longtime shareholder, upped its stake recently. And we also, in the recent past, with a couple of financings, saw both Franklin Templeton and Van Eck, two of the more noteworthy active managers of precious metals funds and the like. They came on board as well. And there's a lot of reasons for this. You know, as I said in that initial video, and I won't spend too much time plowing old ground, so to speak, but it's hard to come up with a combination of a top-notch jurisdiction like the state of Alaska is, and Tony's going to update us a little bit on everything that's happened recently in the news in Alaska. That's number one. Number two, the kind of ground that they have in Alaska, which is one of the richest placer producers historically of any place in the state. A lot of gold still there. They've had great success to date drilling. And they're wrapping up phase two of this year's drilling, more drilling to come next year ahead of a resource estimate. But this is something that has multi-million ounce gold potential. But importantly, even more than that, it's got gold already that is either free gold, meaning it's not chemically bonded or geologically with anything else. And aside from that, it's very easy to get to. Most of it is at or near surface. So all of the things you're going to look at in the future, once they do start to flesh out a resource and probably grow that over time, The economics of this, you can kind of expect, all else being equal, are going to be quite remarkable. And it's one of the reasons why this is the kind of a story, while gold is still consolidating. I think we're going to see this for a while separately, about the same time I'm doing this video. In fact, with Tony, I'm doing a couple other podcasts, including one of my own. And look, I think that from 4,400 to 4,000, we'll use a round number, from high to low so far for gold. We could probably go down another $400 to $600 an ounce, frankly, in the coming few months. Still have a good, strong, long-term gold bull market. And as I'm explaining elsewhere, importantly, the dynamics underneath gold and its long-term story are decidedly different today, in my view, than at times in the past that we've seen, kind of frantic, everybody jumping into the gold pool, and then you have a sharp sell-off, and it takes a while to recover. The world is different than when we had those peaks, whether it was in, certainly different than 1980, but whether we're looking at 2007, 2011, 2000, and thereabouts. We had a couple of tops around $2,000 an ounce for gold in 2020, I meant to say. And then it, bounced up and down a couple of times around that. But today we have such a different mix of things geopolitically, where central banks are concerned, where investment flows are concerned, where currencies are concerned, and not the least of which is a U.S. president who on his sleeve wears his mantra of wanting dollars to be as plentiful as the grains of sand on the seashore. And there's only one way that gold is going to go when you've got that, and it sure as hell isn't down. And so, given all of that, I think it's important to go to a team that has got great success in the past with building wealth in the mining space. A lot of these people have coalesced with Tony at Tectonic Metals. And again, when you get your head around the story, and I urge you to do that if you haven't already, you'll see that the various attributes that you look at for any exploration project all look pretty darn good here. And again, with this long-term prognosis for gold, with this correction that we've embarked on, where you're seeing some of these stocks pull back, whether they've had big runs already or not, this is a time that you redeploy some money to the better exploration stories down the food chain that haven't already gotten a lot of attention so far in this recent bullish move, because they're the ones, especially I believe in Tectonic's case, as they start to come out with resources from their exploration, put some economic numbers around it. This, I think, has got great potential to reveal itself in just the next few years as one of the elite new major gold resources, certainly in North America. And here is my friend Tony Reda, the CEO of Tectonic Metals. Tony, I'm glad you could join me again.
I'm honored and happy to be here. Thank you, Chris.
Yeah, well, look, before we get into more of an update on Tectonic itself, which I already gave a little bit of a teaser on before you came on, and a recap for those who are not as familiar as others with the story, I want to talk about Alaska generally, because most people that follow the resource industry and energy both realize that Alaska is one of the juicier places, for lack of a better term, among the 50 states, certainly, for natural resources. And the Trump administration sure seems to think so. I mean, after singling out Alaska early on with an executive order,
Yeah.
where the president said he wanted to try and help foster greater resource development, he's put some actions and some money where his mouth is just recently. So give us a recap of that.
Yeah, definitely. I mean, it started off with two White House executive orders. The first one was called Unleashing Alaska's Rich Resource Potential. And basically, it said it was focused on deregulation, fast tracking projects, more specifically, projects that were identified as a critical mineral or metal project, and important to the securing of supply for homegrown resources here in the United States. So those executive orders were applauded, and then now we've seen something kind of unusual and rare that we haven't seen too often, where the U.S. government, the Department of War, has actually taken a shareholder position in Trilogy, and they also fast tracked the Ambler Road project that was maybe say initially stalled out, and now it's like full steam ahead. So it's very rare to have a government take a position in a junior mining company. So that was just completely a wild card, let's just say. There's also this award. This, I think, was a $43 million award to Nova Minerals when their subsidiary that would then fast track the antimony production of their Estelle project. So we're now actually seeing government take initiatives to secure their supply. And I don't know if I'd say take matters in their own hands, but definitely influence and move things along. And
Well,
that
and
just,
be more of a friend to the industries than
yeah,
not.
yeah. Yeah, exactly, exactly. They're keeping an eye on resources, and yes, definitely enabling certain projects to move forward. And so it's just really shined a flashlight or a light on Alaska, reinforcing its position as a critical source for oil and gas, for all types of resources, including critical minerals such as copper, nickel,
Sure.
cobalt, many things of that. And the other thing to note, though, in one of those executive orders, gold was identified as a
Yeah.
critical mineral. And what's next on that front? We'll have to, I guess, wait and see.
Well, already we've seen Fast 41 designation given way down in California to Equinox
Yeah,
to expand
yeah,
Castle Mountain. And so they are
that's
going to be a
exactly
lot
it.
more
Yeah.
serious about that. But, Ambler Road, like a few other places, northern Minnesota, those projects is another good example of this. It's been a political football. President Trump during Trump 1.0 wanted this project to go ahead and Trilogy to get permitted. Biden
Mhm.
reversed that, pulled a plug on it. And so
Yeah,
what
yeah.
what what do you see different this time around on the president's part, if anything?
Well, I mean, yeah, good question. I mean, the investment in the junior mining company and some actual legislation that supports that this has been identified as critical. And I don't have the actual piece in front of me, but essentially it was, identified as something that we need to move forward
Right.
and promote. So it's definitely caught the attention of the state, of the junior miners, and the mining companies in Alaska. And again, there seems to be a lot more interest in the state itself.
Well, it's given you guys a great tailwind. I mean, I've said in other
Yes.
contexts, and I'm sure you and I have talked about this before as well, that policy-wise, even though there's an awful lot of work to do and we've got a huge hole to dig out of that was dug over decades to put
Hmm.
us on the
Hmm.
back foot when it comes to energy and resources and things like that, we do have the best policy tailwind and
Hmm.
intentions, really, of our lifetimes, I think, of any
Yeah.
administration that's been in there. So we need to add meat to those bones, and the president,
Yeah.
in some ways, is doing that. How is that reflected in attitudes toward you guys, towards Tectonic specifically, as far as interest being increased in your project?
Yeah, I mean, it's just, I guess it's multifaceted. First off, I think a lot of the corporates or the major mining companies, some perhaps that weren't in Alaska, it's now sort of ratchet up the jurisdiction to a more of a, hey, let's take a look at this jurisdiction as a place we want to actually operate or work in. So we're seeing a lot more inbound. On the buy side or the investment side of things with retail shareholders funds. There's a recognition to move towards, again, homegrown resources. What projects do we want to support? And so instead of perhaps a institutional dollar going to a project in Africa, they're like, okay, let's rank North American projects and let's put a specific initiative together that we want to target this and these types of things in this jurisdiction. So it's helped on a multitude of fronts. There is a project nearby called Donlin, which is the largest undeveloped gold deposit in the world. That's being fast tracked as well. And when I say being fast tracked, one of the review of their permits and the outstanding, there's one permit left to go. That's been sort of fast tracked, and the government said yes, it does meet the qualification, and we can put it on this fast track process. Now, what that actually means yet, we don't know definitively. But if that project does finally get its final permit, you're You have a fully permitted 40 million ounce gold system that's 40 kilometers away from us. And once it receives its permit, the next big milestone, it's construction decision, which then would involve energy, power, infrastructure to now move into an area. And that project will be the largest gold mine in the United States. And the amount of power required to operate that type of project, because it's a refractory deposit, would be very significant, and just open up the entire area. So all these things align in supporting Tectonic's initiative of putting forward a resource in time that would probably even say maybe even rival the size of Dawn. We have high expectations on this project, and we do see it as another anchor in the state of Alaska.
Well, and segueing into that, Tony, you couldn't
Yeah.
have done it better to lead me into this next vein of thought here. And I repeated this, of course, before you came on for
Yeah.
folks. You have got, in contrast to Donlin, which is refractory ore, and without getting deep into the weeds about the science and stuff, just for
Yeah.
the uninitiated out there, it means it's pretty damn hard to get the gold
Mhm.
out of it. In
Yes. Yeah.
contrast, you've got material that is almost the polar opposite of that. A lot of it is free gold, it's easily leachable and so forth. You already know that by and large. But you've also got a massive area with Chicken
Mhm.
Mountain and some of these other areas, all part of the flat
Mhm.
project, where you have as many as 6 different district scale potential resources down the road.
Mhm. Yeah, we're blessed that we're in a mineral belt that's already produced one tier one deposit, i.e., the Donlin, our neighbor. But it's also blessed us with a lot of gold endowment. And I always say the best indicator of gold is gold. A lot of junior mining companies or companies talk about like, oh, gold's got these pathfinder elements like antimony, stibnite, arsenic, so on and so forth. And they are indicators of gold, or can be, I should say, but the best indicator ultimately is gold. And so we actually we're the third richest placer mining or placer gold jurisdiction in all of Alaska. So that's gold found in the streams or creeks. And that is telling us that the bedrock source is a magnitude of much higher. It's also telling us that we have free gold, as you mentioned earlier, that this is not refractory gold. And we have metallurgical data to support that as well. And the property did belong to one of Alaska, or does belong to one of Alaska's largest native corporations. And so we have a partnership with them. They're our second largest shareholder. But because it was under their domain, it wasn't necessarily in the public domain. And we've uncovered a brand new, no, I would say a forgotten gold district that hasn't been touched in over 20 plus years. And we're quite fortunate to have this asset. And it does have the potential for 6 deposits. And we're excited about the robust scale potential here, and the economics that may be forthcoming here.
Well, that is pretty neat. Back when you were first explaining Tectonic's story to me, that was one of the remarkable things about it. And I've been blessed to have a couple other companies on my recommended list right now that likewise had different dynamics where the eyes that are usually on potential exploration projects just weren't on them. And in your case, it's good to remember and to have you remind us all
Mhm.
that because Doyon held this and it wasn't in the typical purview of what the chatter is at mining conferences and among geologists, because it's kind of off the table, for lack of a better term, you guys were able to latch onto this thing, and now you've got something with just ridiculous upside
Mhm.
potential
Mhm.
going forward. I know that you've got some back of the envelope statistics. I'm not going to call you out on them quite now,
Yeah,
but
yeah, yeah,
but there's some pretty massive upside, and obviously Franklin Templeton and Van Eck and Crescat and everybody else sees that. So let's get into the specifics now. You are about
Mhm.
to finish up actually your phase
Yeah.
two drilling.
Yes, yeah.
Tell
So
us about that.
for sure. So earlier this year, we raised $34 million, and we put most of that capital to work vis-a-vis the drill bit. Phase one was launched, the 3 drill program, in the end of May. The phase one was over 7,700 meters, focused primarily on discovery and also doing collecting material for more metallurgical test work. And then phase two, which is where Franklin Templeton and Van Eck, two of the largest gold funds in the world, became inaugural shareholders of Tectonic. Crescat, which was an existing shareholder, deployed a massive amount of capital as well. And that gave us the capital to now launch a phase two. And phase two, the initial target was 9,000 meters, focused on flushing out some of those discoveries, but also taking a step towards our first ever maiden mineral resource estimate, which we're targeting for next year. And the target was 9,000 meters, and we're wrapping things up. And I can say we're well over 10,000 meters now. So we exceeded on meterage. We do appear to be on budget. And if you look at phase one and phase two combined, that's over 18,000 meters of drilling this year, which makes it the largest drill program in the history of this project, and the largest drill program actually in Tectonic's history as well. So if you've gotten to know our team and our past successes, you'll know that when we start, getting to this sort of capital raising amounts and that sort of meterage typically means that we're really excited about what is ahead. And, for our shareholders, we'll have, over 50 drill holes to come between now and Q1 of next year.
While you were talking, I put it back up on the screen, a slide that I shared from your deck before you came on. I love the slide that says, "In God we trust, everybody else bring data."
Yeah.
And so you're hard at work. You're hard at work on the data part of things.
Yeah, exactly. And just for context, that slide is like, I guess in our industry, and I mean other industries, everyone can talk their book. And I always say to my team, and especially those that are on the communications front, is, whether you're talking about the project or the people, just let the data and the evidence do the talking. You can say 6 grams over 35 meters, you can put these superlatives in there and yada, yada, yada. At the end of the day, just say the gold grade and the intercept. They'll know what it means.
Mm-hmm. Yeah. You and I, when we were talking a few weeks back and just kind of talking shop and so forth, we were talking about what some junior companies and explorers still do. And, everybody's looking for that big hit, that big assay. I think the way you put it, they're drilling for press releases. Maybe I put it, we both agreed on that term, whatever. But you guys are building an economic story as much as anything, really.
Yeah.
And the gaudy assay numbers are nice if they come along, especially in your case when you're talking about material that's at or near surface, that's easily milled, it's easily recovered, etc. But what are your objectives? And I know you can't put a number on anything yet, but what are your objectives for coming out with this initial mineral resource estimate? Is it number of ounces? Is it showing on the surface some great economics? Both?
Yeah. I guess so. First thing I would say is whenever Tectonic acquires any project, we want to see a footprint that's indicative of 5 million ounces and much greater. So sometimes these projects don't even have a drill hole. So it's like, how do you know it's 5 million ounces? Well, you look at the mineral belt that you're in. Is there a history of this sort of size of project there? What is the rocks, the scale, the tectonic setting, pardon the pun, but the structural domain, the structural reason? Is this an area that can produce large scale deposits? You can look at gold and soil anomalies, geophysical anomalies, placer gold as an indicator, previous drilling. So we take all that data and we marry it, and if soil is aligned with geophysical anomalies, okay, well then we can maybe trust the soils, trust the geophysics. So these start to give indications that, hey, this may be a large system. And what our goal, and so that's our goal when we acquire an asset. So we want it to be at least 5 million ounces. When we looked at flat, we've always touted it as a tier 1 opportunity. Well, what the hell does that mean? Well, Barrick, explains that a tier 1 opportunity is 500,000 ounces of annual gold production over a 10-year mine life. Now, that's a pretty high bar. Would we take a tier 2? Yes, we would. Maybe even a tier 3. But that's kind of the indications that we're seeing that this thing does have that sort of potential. And when you say like what's the ounce number that you're looking for, it's just like a drill result. If you see a great drill result, let's just pick like 2 grams over 40 or 5 grams over 30. Those are pretty good, very good drill results. But you then have to factor in metallurgy, because that can discount the grade. You have to look at topography. Where's the gold situated? Is it at surface? Is it an underground target? Is there overburden? Is it on would the strip ratio be? So all these things factor in. So our objective here at Tectonic is, when we put out our first resource estimate, we want it to be followed by some sort of economic engineering study, and that will give you context of what an ounce is worth. And the first sort of economic and engineering study that a junior company might do is called a PEA, a preliminary economic assessment. And so that's something that we would strive to do, that 1-2 punch. So that's a resource followed by an economic engineering study, so the world can understand what an ounce of gold is worth. And there's no shortage of ounces out there that aren't mineable or aren't economic. So is that worth putting out? Well, for us, we want to show with our initial resource estimate that, hey, this is the amount of ounces currently at this moment in time. This is also how we can grow this from, say, 3 million ounces to 5 to 10 million ounces. And to say grow it, it's not just actually saying it, but show me the evidence that supports that you can take it this time. That would be, okay, maybe it's open along strike at depth. Maybe there's other pods of mineralization that can turn into resources. And then we want to, again, add context how we're going to mine that gold. And the economic engineering assessment, the PEA, is important, but what makes gold economic? There's another thing, your social license as well.
Right.
If you can't get the local communities, in our case, the local communities and the native corporation, which happens to be our shareholder and the landowner, by the way, getting them on side to facilitate the permitting and the operating of this mine is all critical to any project or mine being economic. So that's kind of our game plan going forward. Is, yes, we'll have a ton of discovery, but we want to work towards that initial mineral resource estimate, follow that up with some sort of economics, and then continue to lift the veil on why we think this could be the next Dolmen or the next 10 to 20 million ounces of gold here.
Well, and you've got a lot of potential for that. That's like I told the folks before you came on, Tony, that right now the dynamics in the markets generally, with precious metals specifically, is that we're going to be in a consolidation phase of some type for a while. And this is one of those times that you go back, you look at what didn't get bid to the stratosphere in the first big wave, but still has a superior story, and you place your bets. I mean, you guys have done well. You're about double what you were when I recommended you, but you were a little higher than that. You've sold off a little bit with everything else. And this is a time that wise investors who understand that the long-term tailwind and story for gold is unchanged. We're dealing just with a overdue correction, frankly, right now. This is the time, folks, that you take profits where you should, but you redeploy money in those stories that have got this kind of blue sky, as you see here. And I used another one of your slides as you were talking, Tony, where there are, of all the different factors you look at in geologically and otherwise with an exploration story, yours is one of the cleanest and simplest out there, that even when you're looking eventually at a strip ratio and the cost for mining and stuff, you're kind of low on the totem pole cost wise, potentially, because of the type of ore body you got.
Exactly. And that also is another criteria of what makes it a tier 1 deposit, is that you're in the lowest quartile of all-in sustaining costs in the industry. And one of the best ways to be lowest quartile is typically, heap leach. It can be very cost effective as a mining mineral processing technique.
Yeah. Well, to be sure, a lot of work to do, a lot of news to come, but this is one of the ones, folks, that should be at the top of your list for an exploration junior in the gold space, and with a team that, and I'll put up here one more time, has got a lot of data that they've brought to bear in the past, and a lot of successes that they brought in the past as well. So once more, make sure that if you've not done it already, do your homework on Tectonic. Here again is all of their contact information. Go back and look at Tony's and my previous discussion that we had. Kick the tires, do your homework, keep in touch with both of us, because again, I think long term, this is one of the really elite and simple and straightforward exploration stories out there in gold, but one with incredible blue sky potential. So, Tony, thanks for your time today, and I look forward to our paths crossing again one of these days soon.
Yes, thank you again for the opportunity to be here.
Take care.
And the support. Bye.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.